Hello everyone, my name is Kensuke Yasu of Osaka Exchange. It is my pleasure to get an opportunity to talk about Japan's commodity futures market today. Japan's commodity futures market has a long history, and I would like to elaborate on key characteristics and the prospects of Japan's ever-changing commodity futures market. Our derivatives market are operated by Osaka Exchange (OSE) and Tokyo Commodity Exchange (TOCOM). Both exchanges are one of the trading venues on the JPX, Japan Exchange Group. JPX offers a marketing system ranging from exchanges, clearing house, market data business corporation, and self-regulatory organization. Tokyo Stock Exchange, one of the largest equities market in the world, is also on the JPX. OSE has a financial derivatives such as Nikkei 225 and Japanese government bonds, as well as the commodity derivatives, including precious metals, rubber, and agricultural products. Some of you might remember TOCOM used to provide a wide range of commodities. In July 2020, most of the products were transferred from TOCOM to OSE, and TOCOM now focuses on operating energy derivatives like Dubai crude oil, electricity, and LNG. In this slide, I would like to introduce the history of Japan's derivatives market. In the early 20th century, various types of commodity futures were actively traded at many commodity exchanges in Japan. But all transactions were prohibited before 1945, and the market resumed in the early 1950s with a limited number of commodity products. In the 1980s, precious metal futures such as gold, silver, and platinum were allowed to trade at the exchange. And in the financial derivatives area, 10-year JGB government bond futures started in 1985, followed by Nikkei 225 and TOPIX futures, the most famous equity index derivatives in Japan. Additional commodity derivatives such as corn, palladium got listed in 1990s, and crude oil and petroleums were added to the product lineup around 2000, when Japan enjoys the status of one of the largest commodity markets in the world. During the latest 20 years, in line with the market development, many commodity products, including mini-sized contracts and electricity and LNG, got listed on JPX. We are ambitious to keep expanding this lineup. I will show you an example of how the long market history is fascinating. Here is a long-term chart of OS's RSS3 lava futures. After several years of price fluctuation from the listing in 1952, the RSS price faced a long-lasting downward trend in the 1960s due to the oversupply stemming from consecutive releases of strategic stockpiles by the US government and the adverse effect of regional conflict and the Cold War. In the 1970s, the price soared due to the oil crisis in 1973 and 79, and the market experienced a long-term downward trend again in the 1980s in response to the rapid JPY appreciation. From the late 1980s, retail investors, dealers, and commercials traded actively, and Japan became the world's most liquid rubber futures market. Like other commodity products, the rubber futures price boomed thanks to China's rapid economic growth until the global financial crisis in 2008. After the ZFC, the price hit the highest in history in 2010, reflecting China's strong rubber consumption. Now, the price has been on a long-term downtrend. Looking through this chart, we can see the rubber futures price sometimes keeps an up or downward trend, lasting for more than 10 years. Now, I will dive into more details of our market structure and characteristics. This slide shows the top 10 contracts in terms of the average daily trading volume of JPX financials and commodity derivatives. In the financial derivatives, Nikkei 225 mini is the largest in terms of trading volume, with over 1 million contracts, followed by Nikkei 225 related products, topics, and JGB. In commodities derivative on the right-hand side, gold, platinum, and Dubai crude oil are major products with much market liquidity. To combine financial and commodity derivatives, the volume of gold standard futures is ranked between JGB and mini topics futures. The first characteristics of our commodity market is the active participation of overseas and retail players. This slide shows trading volume by type of investors among four major commodity futures. Though all the JPX derivatives products are settled in Japanese yen, more than 50% of the trade of gold and platinum was done by overseas-based players. Some are commercials and some are commodity funds, but a large part of trades came from proprietary trading firms, including market makers and dealers. It's also noteworthy that local retail investors are important customers, dominating between 20% and 30% of the trading share for precious metal futures. For Dubai crude oil, professionals seem to be the main players, and the share of retail investors accounts for less than 10%. But this number lacks retail trading through ETF-related products, which retail investors invest in. Retail investors trade differently from global professional players, so both markets have trading opportunities in the market. The second characteristics of Japan's commodity market is that the liquidity is concentrated in the back month contract, not the front month contract. The graphs show the volume percentage by contract month for gold and platinum. It clearly shows that most of the time, the back month contract was the most active, which is a common characteristic of other commodity products. This has been the case throughout the history of commodity futures in Japan, where retail investors who wish to hold positions for a long time to seek profit used to be the main participants in Japanese commodities market. Although the market structure has changed, this kind of behavior is still super interesting. From this slide, I will show you several recent topics in our market. The first is the impact of the Russian invasion of Ukraine started at the end of February. As the conflict continued and sanctions on Russia were imposed, global commodity prices surged rapidly. In our market, gold prices shot up and the volume significantly surged as investors sought safe haven assets. We also saw increased crude oil prices and volume as the US banned Russian oil and other countries followed. This indicates that Japan's commodity market is highly correlated with and affected by global markets. In connection with this event, OSE suspended the designation of Russian brands as good delivery materials in our platinum and palladium futures markets, as the London Platinum and Palladium Market LPPM took steps to exclude Russian brands from certification list. The second topic is that we started to offer holiday trading for derivatives in September this year. Many retail investors and overseas investors used to point out that the disadvantage of fewer trading days of Japanese markets, which observed 16 holidays in 2022. The additional trading days under this scheme are expected to increase the volume of derivatives trading in Japan and the initial results are promising. Total trading volume on the first day of holiday trading exceeded our expectations, reaching 49% of weekday volume. Night session trading was unaffected, maintaining 90% of weekday volume. We got the same trading flow trend to commodity futures, reaching 41% of weekday volume. We provide information online tools for overseas investors. We recently launched Market News and Insight website, shown on the left-hand side on this slide, where you can find many types of English articles on our markets. We also have a LinkedIn account focusing on our derivatives and commodity markets, so following our account is much appreciated. Well, that's all for my presentation. Thank you very much for your attention, and I will give you my last tip. Japan lifted the travel restriction this month, so the time will come soon for us to meet up in Japan or your country. Feel free to reach out to me anytime if you have any questions about our markets or good sightseeing places or restaurants in Japan. Thank you and see you soon.